Over 60% of investors are missing out on billions of dollars in rewards every year because they're ignoring staking as an investment strategy. Either they fail to consider staking returns when choosing which crypto asset to buy, or they spend less than 30 minutes planning their staking strategy, making it nearly impossible to compare different setups. When I started staking in 2014, my only measure was a scrappy Google spreadsheet with inaccurate figures. I also realized if I had staked my Atom Cosmos tokens back then for 5 years, I could have earned an extra $10,000 on my $10,000 investment. I wish I had known that earlier. Unfortunately, I missed out on lots of attractive investment opportunities like these and thousands of dollars in rewards. On the other hand, this was the beginning of our journey to develop the first version of staking rewards and the staking calculator. Fast forward to today, we are proud to be leader in staking data and information. Believe me when I say that you don't want to miss out on these great investment opportunities simply because you didn't consider the power that lies in staking. We are in the golden age of crypto and we've never been more early. It's not too late to start with staking. So let me introduce you to our new staking calculator. No more best guesses or complex spreadsheets. Here is a free tool that can help to optimize your staking strategy and portfolio. Let's walk through some features of the calculator. As a first step, you can choose any asset that we have integrated and deemed to be fully accurate on stakingrewards.com. You can choose between 50 assets to compare staking rewards. Just choose between different categories, different ecosystems that you want to filter for, or just type in the assets that you would like to see and select it. In the next step, you can choose from any staking provider that is claimed on stakingrewards.com. Just choose from the list by scrolling down, or again, just typing in the search whichever staking provider. As a bonus, we have the different categories, and we also have liquid staking. And here for solo staking, you can see the profitability and compare that for running your own Cosmos validator and see when you break even and so on. In the next step, just going back here to a POS provider, you just enter your staking amount. So you can do that for the US dollar token amount. So it's $20,000, for example, or you toggle the button here to enter your amount in the native token currency. In this example, it's Atom. So let's say you have 5,000 Atom token, then you see the current value of that down here, and then the 1-day earnings, 7-day earnings, 30-day earnings, 365-day earnings down below. And on the right side, you can choose a different staking time to compare the different strategies in the chart here. So you can choose a year between 1 to 10. You can choose a month from 1 to 12 and days from 1 to 30 to take the staking time that you are expecting to stake. So let's put 3 years here. And then if you're planning to stake 3 years, probably the price will change. So you can enter expected price for yourself after 3 years. So let's say after 3 years, you expect the price to be $100. And then you can see the total returns based on that expected price. It obviously just reflects when you enter the US dollar amount, and the expected price curve takes into account a curve where most of the price increase or decrease happens towards the beginning of the curve, and then it flattens out over time until the staking time. And after the staking time, there's no expected price movement anymore in the chart that you can see here. The next thing that you can do is you can make scenarios. So let's say you expect the staking ratio to be 50% in the future. So you can just take the slider, move it to 50, or just take this and 50% here. And then you see the reward rate is going down from before it was 4.69%. And then with 50, it's 2.45%. So this gives you a more accurate understanding of how the staking economics really work and how your rewards are expected to change over time as well. And one other important point is when you put in expected price here. So let's say you expect the Ethereum price to be $3,000 after 1 year. This is what your returns will look like for staking $10,000. Then you also see the charts for selling your rewards or not staking. So the not staking chart is only for the price increase without staking based on the expected price scenario, and all the others are based on staking plus price appreciation. The interesting part is you see the total reward here. This is including price returns for the total staking time. So if you put in, let's say 3 years staking time, then the total reward rate is also shown for the total of 3 years here. Let's dive a little bit deeper into some practical use cases here. First use case, you want to decide whether you want to buy tokens and stake them. So let's say you're considering to buy $20,000 worth of Cosmos tokens. So you select Cosmos here, any staking provider, that's fine. Just enter $20,000 into the staking amount field here. Choose a staking time. Let's say you expect 1 year and 6 months. And then you can play around with the expected price scenario and increase. Let's say after 1 year and 6 months, you expect the price to be just $10. It's a small price decrease. This is what your returns would look like without staking, minus 2,000. And with staking, it's actually up to 5,000 plus, which is pretty impressive. And especially if you expect the price to go up after 1 year and 6 months, let's say you expect it to go to $30, then you can see the returns here, which is for a compounded total return of 55,000 on your $20,000 investment. So this is pretty powerful. So you can take notes of that and then compare it with different scenarios. Just write down 55,000 and then put in a different scenario where they expect the price to be 25. The return is only 34,000. And let's say in a worst case, maybe it goes to $5. Then the loss would be with compounded staking only 7,300, whereas without staking, it would be 11,900. The second use case, you want to decide whether you stake your idle assets. Let's say you have 50 Ethereum. So you select Ethereum from the assets here and then just toggle the input button from US dollar to ETH, enter 50 Ethereum that you want to stake, and then you can see your earnings here. For 1 year, it would be 2.34. And let's say you want to stake for 5 years. So you enter a 5-year staking period. You can also play around with the expected price and increase and decrease, but it doesn't change much on your actual token returns. So token returns will always be compounded here, 13.2 ETH that you can expect for 5 years. Based on that, you can take notes and see if that's worth it for you, that you want to stake your assets. Now, in the next scenario, let's say you want to decide whether you want to solo stake or stake with a provider. Let's do that for Ethereum. Or you want to see when you break even solo staking. So here we have return of 4.69% with Lido. And then when you solo stake, it's 5.28%. So we already see there's a difference. But you also want to consider, obviously, the setup costs that you have and the monthly operational costs for running validator. So let's say you selected the run a validator option here. You have 32 ETH that you want to stake for one validator. And then you can go down here to see at which point you break even if, let's say, you have one-off operational costs of like here, maybe $500. And then you can see the break even would happen after around 77 days, which is very interesting to say, because after that, the return will be higher than compared to Lido, for example. So this is very interesting and helps you to decide whether you want to solo stake or not. For the third use case, let's say you want to optimize your staking setup or switch different providers. Let's say you have 1,200 Solana, so you select Solana from the asset dropdown, switch to Sol here. Let's say you have 1,200, and now you're considering to optimize your staking setup. And it's pretty hard to measure the long-term impact of choosing a different provider. Let's say you choose one provider here. We're going to take as an example and 5-year reward rate here. So you see after 5 years, you can expect after compounding to earn 3,086 Solana tokens. And then you can take note of that, 386, and then select a different provider. Let's say you take a verified provider like a Chainotech. And here you have after 5 years, a total of 513 Solana token. That's like much more significant. And that's great to see. So you can actually compare the different providers here from the list, choose, just select for the time frame that you want to stake with, and then just take notes for the expected returns there, and then make a decision which provider you want to go with. For the next use case, let's say you want to plan your budget over a certain time frame. Let's say you have $50,000 saved up and you have a wedding planned in 1.5 years. So you consider whether it's worth it to earn passive income in the meantime until the wedding date. It's pretty hard to estimate if it's worth the risk. What we can do here, just select US dollar tokens. Let's say you have $50,000 saved up, time until wedding. So let's say it's 2 years until the wedding. And then you can play around with different assets and see how much you can earn there. So for Solana, after 2 years, you would have a total return of $7,600 US dollars. And if you expect the price to go up, so you can also play around with that. Let's say instead of $21, what is the current price? The price will be $50. So you would have a total extra of 87,000, which is great. But at the same time, the price could also go down. So maybe instead of 21, it would be $10, and then you would have a loss of 22,000 when you stake with compounding returns. And then you can select different assets. Let's say you want to stake Polkadot. You have the $50,000 wedding budget, select 2 years. And then here we have a flat return of 21,000, which is already much, much higher than the 7,000 from Solana. It's pretty interesting as an investment strategy. And now let's say you expect the price to go up. Instead of $6.5, you expect the price to be $30 after 2 years. So the total return here for staking Polkadot would be 278,000 after 2 years, which is a total return rate of 524%. At the same time, you may want to consider the price going down, maybe even as far as $2, which would lead to a loss of $28,000. Here you can play around with all the different scenarios and then just take notes of the different returns here, compare it to each other, so you can decide which assets is worth the risk for you to take to stake your wedding budget until the wedding. As a next use case, let's say you want to play around with the different staking scenarios and see what is the expected price if, for example, Ethereum, now certain percent are being staked, but you expect this to be 50% in the future. Just enter your amount here. Let's say you want to stake 32 ETH for 2 years, expecting a price of 3,000 or let's say $4,000. And then you can scroll down here to the staking scenarios. And then the current expected total reward rates after 2 years would be 133%. And if the staking ratio would be at 50% right now, so you can enter 50% here, then this return rate would only be 123%. So it would be a little bit lower. And then you can see the impact on your rewards up here. It's 1.6 Ethereum tokens now. And at the current staking ratio, this would be 3.1. It's significantly less in Ethereum tokens, but in the total reward rate, it's not that big of a difference. At the same time, you can see what would the rewards be if a certain percentage of the rewards comes from MEV. If one of your providers runs the MEV relay, and then you can see currently, I think it's around 10 to 20% of the rewards coming from MEV. So you can also factor that in if you want to consider that, for example, Lido also includes MEV or any other provider that you want to choose. Most of them that we have here do not consider MEV, so you can just factor that in by yourself. Let's say you go with Stakewise, which is a flat 4.7 APR. And then if we expect another 30% coming from MEV, then the total reward rate would be 141. And we can reset this also here to see this would be 6.72%. Instead of, when we reset this, 4.7%. So this is great to see, and you can do the same for all the other metrics that impact the rewards, like the transaction fees in the network, the effectiveness rating, and so on. Just play around with it to better understand staking economics and really see what impacts the rewards and how you can get the most out of it by being smarter in your staking decisions. For the next scenario, let's say you want to decide whether to compound, hold, or sell your rewards. Let's say you're planning to stake NEAR tokens with Chorus 1. So you choose them here. You have 20,000 US dollar that you want to stake. And then you select the staking time, let's say 2 years. You have an expected price. Let's say we take one bull market, one bear market scenario. In the bull market, you expect the price to go to $5. You see the different returns after 2 years here, different strategies. If you don't stake, it's only 29,000. And if you compound your rewards, then it's 39,000, which is pretty powerful. And also, if you sell your rewards, the difference there is basically between compounding and selling your rewards around $2,000, which is very interesting. You can consider what's better for you, considering here the compounded returns are higher than selling your rewards. Whereas in a bear market scenario, let's say the price goes to 50 cents. Here, you have a higher loss when compounding and lower loss when you sell your rewards. So here, it's the opposite way around. You have, when you compound, minus 14,000, and if you sell your rewards, minus 13,500. And this obviously gets way, way more as the rewards get higher and the time frames and expected prices diverge even more. So this is really interesting to see, like, okay, if it's a bear market scenario, then you may be better off selling your rewards, or if it's a bull market scenario, you're obviously better off compounding your rewards. As a last bonus use case, we have something special for you. Let's say you're currently staking Atom tokens with Lavender 5 nodes. You select them here. You have 2,000 Atom being staked, and you want to see how often should you restake. What's it worth for you to do the restaking transactions? And you don't know like how frequently you should do it because of the transaction fees. In that case, you can just scroll down here to the optimal staking frequency. And you see in this case for 2,000 Atom, it will be 4 days and 16 hours based on our calculation, considering the average transaction cost that you would pay. This is how you can maximize your rewards, which is obviously different. If you select 4,000 Atoms, then the optimal staking frequency is already 3 days and 2 hours. Obviously, and as it's lower, let's say you have only 1,000 Atom, then the optimal staking frequency is just 6 days and 15 hours. That was all the use cases. Let us know in the comments which of the use cases is yours. If you have any others, if you figure out any other functionality, or if you would like to see any new features on the calculator. We are continuously seeking to improve the tool now that it's out. And obviously, if you have any other problems or any needs that we should address with the tool, please just let us know in the comments or in the Discord, linked down below. Then, happy staking and stay tuned.